Welcome back, YouTube. So I want to cover a few things in this video here, and we're going to talk about some of the macros as well, but also some of the things that we touched on yesterday when it comes to the price action and this pool of liquidity that we have here for Dogecoin in particular. So right now, we did in fact close green yesterday. We were able to break the trend here the last 3 or 4 days of closing down. We actually pushed back up to pretty much the edge of this fib zone here, like we were talking about yesterday, that range that we're looking for between 30 and 33. It looks like we're now officially in that range that we've closed inside of it and then rallied to the edge of it. Just to right now we're red right here on the cusp of it, so we're officially back in this zone that we were in from, what was this, I want to say December 19th through January 2nd. This was the zone that we bounced into. So this has been our primary liquidity zone as far as for trending sideways. This other trend here, we're still aggressively trending upward as far as for our closures. And we had a somewhat of a break here and tried to grab some liquidity, partially filled this gap zone. And then we're able to grab liquidity in this zone I just mentioned, at 30 to 33 mark. So now we are officially back inside of this zone. And the beautiful thing about this zone, before I move on to any of the other topics, I want to point out is that this zone it's a relatively small zone, and the bounces and the swings here are relatively tight. So what we talked about yesterday is a thing that is going to attract a lot of traders, is because if they have the leverage to come in here, they're hoping for like this deep pullback. Something like we see here. I know this is green, but this was actually because we closed green, but this was a deep pullback, and if you're able to get in below that, they're able to do a pretty good swing. So when you have these tight zones into this point of the cycle, you'll see a lot of that price action go in there. So you can expect, before we get some momentum here to go to the upside, you can expect like some tennis or ping pong action inside of this zone. It's a tight zone, 30 to 33, but you typically can expect that. And if we get that deep pullback here, it can be, especially if we close up, or it can be mistaken for a push to have a breakout. But again, you have to kind of keep in mind that the traders are going to come into the asset. So I'll give you an example. We can take a look here. So if we take into account that when this was at the 26 cents range, it was red, right? So this was bought up, right? This is why we closed green on the day. So if you're not considering swing traders and everything into the market, they're coming in because now we got that deep pullback. We've broken this fib line. They're coming in, they're taking their position. So they're helping the long-term investors buy this asset. But then that gets mistaken. So they're saying, hey, look, we know we're about to take off. Let's take this this position here. We're going to have this potential run. And then so we have this big push up above the 33 cents level, right? But they got in at 26 cents. So now that we broken into this zone here, they're now taking profit. So then you have, even though you went above it, so now you have this sell-off, and we still closed green on the day, but then now you have this sell-off, and it looks like, okay, well, now we have weaker price energy. And then we go down and grab liquidity again from around 33 cents. And then we do the retest at 33, and then we kind of repeat that. So just saying, this is one of the important things here that you would learn in particular from like day trading or something, especially if you're going to look at some of the long terms. You want to wait for those confirmation candles. So waiting for an additional candle will kind of certainly give you a stronger idea of the trends and the direction that you're going into. Because if you're going off of just the particular candle, it can often mislead you. Not saying that's always the case, but you can certainly reduce your risk if you are waiting on that confirmation candle. So if we do get a deep pullback, it's not the end of the world saying, hey, look, oh my God, we're going to consolidate down here. Again, wait for that confirmation candle, whether that's to the upside or to the downside, to get a stronger idea of trend. But you can certainly see there could be a big push upward, but that could not necessarily be the breakout candle that you're looking for, or that it could be giving the illusion to. So just kind of be cautious of that, because I know once we see that price action of recovery from 26 cents, you'll see a lot of stuff and videos come out and say, this is it. This is the candle. and it could just be swing traders taking position. So wanted to point that out early in the video. Let's take a look here at Bitcoin. Then we're going to take a look at some of the macros that's going on here, because I think today was very interesting. We closed on our first full week of business in 2025. So it's going to be very interesting here. So we are in fact using, we confirmed this. We're looking at this yesterday, confirmed today's candle. We're opening up the candle that's going to take us through tomorrow. But we are in fact using the 72-day as support right now. And it looks like the 14-day has become our resistance. So what does this mean? So also on Bitcoin's factor, it looks like we're having a little bit of a tightening here, where we can see kind of like a flat line between the two until we're able to retest some of those levels. But again, as long as we are above 90,000, we're not looking to go any lower. We've consistently been able to grab liquidity from this range, just like with Doge at around 30 cents. We've been consistently able to grab liquidity from there. The biggest thing that we're going to look at on a macro range would be obviously that 90 to 100K range here. So if you want to kind of do it, we had some pushback around like the 99, 98 range, but overall that's going to be like that $10,000 window that we're looking for as far as consolidation. But right now on a micro, we're looking at roughly around, let's say, the 91, 92 to around 95. So about 50% of the macro is going to be the micro for price action, what we've seen over the last few days, which is that 91 to 95 compared to the 90 to 100. And we've been pretty much riding the 72. Now, obviously, as long as we're above this level here, especially at around like 94,000, we can probably rest on the 72. But if these candles start to get smaller, let's say like if we start to get like some stars here, like on the 4th and the 5th, a decision has to be made as far as for liquidity coming into the asset, whether or not it's going to be strong enough to push up. And that can lead us to push down and retest that 90,000 to see if we're going to be able to grab some liquidity again to push up. So remember, weakening candles will make a decision for you. And typically that's to the downside. If there's not enough pressure coming in to either keep it at that current level, or more importantly, push to the upside, you'll typically see a reach down to grab liquidity for a retest. So no different. Wait for confirmation candles and you'll be able to better gauge things and get a sense of direction. So I'm going to go to CoinMarketCap really quickly. And ironically, the crypto market closed up today 1.73%. Still a little notch up on the fear greed index, but still pretty much relatively neutral. But I wanted to allude to the things that we're seeing here in the market. So overall, the top 10 specifically over the last 7 days at least is red. We got some green here in the last 1 hour. Definitely a lot more green in the last 24 hours. So we've certainly seen a tick up, especially for Doge. I want to say 3.5. So yeah, Doge is right behind XRP as far as being a top gainer in the last 24 hours for percentage wise. So we are looking at these trends very closely, but I wanted to point out that we closed our first full week of business in 2025, right? And with that being said, with these numbers coming out, I have some data here. S&P was down 0.92%. NASDAQ, aka QQQ, down 0.72%. The 10-year Treasury was around 4.7%. And obviously this is going to play huge roles as far as for the rate at which companies can borrow debt, mortgage rates, and a big thing as far as for how people feel about the economy and the signals. Remember that emotions control the economy in the short term, not the facts, right? So short term, we're looking at these numbers here. You can certainly see some panic sells and everything kind of come in, but in the short term, you're looking at more emotional moves compared to a longer effect. So right now, people aren't necessarily feeling the economy is as strong as it's being led to believe, right? So we saw some sell-offs in healthcare, energy. Well, energy was doing well, pretty well, but we saw some sell-offs in healthcare, tech, the financial sector. Tesla is down, but obviously they had to do some recalls, and then they also missed some numbers here. So Tesla was certainly down. So overall, I know that we're due for on a macro thing. If we're looking at cycles, I know we're due for a recession in a couple of years. Now, typically these can come sooner or a little later. I do believe that this first year, at least for the first 2 quarters or 3 quarters, I do believe that we're going to be fine. I'm interested to see some of the changes that Trump and Elon make once they get into office, and maybe we can keep the train rolling. I just made a post on X a few minutes ago about the returns here of the S&P. The quote says the S&P 500 just registered 20+ years, 20+% years in a row, something which occurred just 10 times since 1871. Only during the 1990s bull market and the roaring 20s did the good times continue for another 2 years. So I guess the question is, and even I'm going to put this in the poll today, do you believe that we're tapped out based off of the gains we've seen in the last couple of years? Or is this something that is going to continue at least for another year or so? In my opinion, I believe that we're not quite tapped out yet. I believe that we're going to see some gains, at least for the majority of this year. I do believe that it was time for overall a pullback, because since it was announced, since Trump won the election, everything has been running to the absolute heavens for the last couple months now, 2.5 months. So we have to kind of keep that in mind too. Like the economy, the stock market, crypto, all these things were not that hot until Trump won the election, and then literally things just start taking off, especially Bitcoin. So it didn't even, projections weren't even projecting Bitcoin to hit 100,000, last year, 2024. But then when Trump won the election and they were talking about Bitcoin and being pro Bitcoin, it just blew all those projections out of the water, and we were able to actually hit it in 2024. So I do believe that we have, especially if we're able to get some policy changes early in the year, I do believe it's highly probable that we'll continue this for the next 2 or 3 quarters. But I do believe that it's probably likely we're going to see some shifting here around, especially around Q4 of this year. But again, that depends on policies implemented. We could certainly see some changes here. Let's give this the new administration a few months, I'll say at least a quarter, to see some policy implementation, and then we kind of get an idea of what to expect going forward. But I think we still have some gas in the tank for this year. I'm going to put it in the poll section. I want to know what you guys think as far as for the market, and whether or not you believe that we are pretty much exhausted on this run and we're going to have a deep pullback, or if we still have some gas in the tank for 2025. So with that being said, let me know your thoughts in the comment section. Please like the video, share it with a friend, subscribe to the channel so we can get to that 100,000 mark. I appreciate all of you guys. Thank you, and I will see you in the next video.